Hi everyone, so in this lesson we're going to cover order block variations. What we're going to cover in this lesson are the variations, and they include order flow, full body candle, inside bar and range. So in this example what we're going to be looking at is the order flow order blocks. So order flow is essentially the trend or the direction that the markets is moving. So at the moment in this example we are looking at bearish order flow. So for these examples, we're going to be looking at the entire buy range before the sell-off. Okay, so we've got these three buy candles, including this wick on the sell candle, because if you imagine further down on the lower time frames, we'll have some buying pressure within that. So we're interested in the whole buying momentum within this leg before the sell-off. So what we then use is this GAN box to mark roughly where the 50% is, and this is usually the area that would be interested in a mitigation. So as you can see, we've had a push off, price has dabbled about a bit, okay, and then it's come back up, mitigated the 50%, and then it's created another buying leg before a sell-off just here, and it's created another order block, which is then come back up, created another buying leg, which is mitigated the 50% here before a sell-off. Okay, now this sell-off here hasn't been quite as clean as the previous two examples, and as you can see it's just come shy of meeting the 50%. However, it's still an area that we'd be interested in. If you was taking a trade from this area and you had a pending order, you could potentially look at taking a market execution or just accepting that this trade might have been a missed one. However, this example here, this is a better example because we've got this buying leg here, which has then created quite an impulsive push away. As you can see, it's then come back up and it's just pushed past the 50% of this buying leg, which you could also in this example refine this area to the last candle before the impulsive sell-off. However, with this example, we're looking at the order flow order blocks. Okay, so this is quite a good example. We've got a very impulsive movement. It's far more impulsive than the previous ones, but it's still showing you we've got the order flow in that direction. So what we can use these type of order blocks for is when you've got some order flow like this, if you were able to get into maybe the first point or even the second point, all right, we could look at using the following order blocks as scaling trades. All right, so if we've got a trade here, for example, we could potentially then get into a second trade on this order block and potentially a third one, providing we can lower our risk on the previous trades. So let's have a look at full body candle order blocks. So the area that's piqued my interest is this candle here, the sell candle that has initiated this impulsive buy, which is broken structure to the left here. So a full body candle is a candle that doesn't have much wick. So as you can see, we've got these three candles just here. It's clearly had quite impulsive decisions within inside these candles. So as price has pushed up, this buy candle was closed. Let's zoom in a little bit so we can see a bit clearer. So this buy candle was closed at the end of the minute and immediately gone across. We've had a spike up and then push down. Okay, and then as it's pushed down, it's had, as soon as that's closed there, there's been a quick decision to buy straight away. So from there we've had immediate buying pressure, and that immediate buying pressure is what's fueled this push to pass to break this structure to the left. So what we're going to do, we are going to mark this area as an area of interest or as an order block. Okay, and let's zoom out and we should get a mitigation from here. So as you can see to the right, it does look like we do get that. As you can see, we do. So what's going on here is, like I said, we've had that sudden change of momentum within those candles. So think of it this way, we've got a sudden impulse here, and when the candle's closed, it's impulse back up, okay, and it's closed here. So this candle has just been buying pressure only. There was a little bit of buying pressure within inside this candle where that wick is. Alright, then we've pushed down, and as the candle's closed at the bottom, it's just been an immediate, as soon as that candle closed, straight away buying pressure came into the markets, and that buying pressure is what broke the structure to the left. So this is why this is an area of interest for us for getting into a potential trade. So what we're going to look at now is inside bars. Now, from previous lessons, we should understand that an inside bar is essentially a range on the lower time frame. So let's have a look at this one, for example. This inside bar marks in orange. Okay, inside that candle will essentially just be a range where price has just gone sideways before it's then impulsed lower. So we should have covered that lesson beforehand. Now, the indicator that I use for identifying inside bars and just making it a bit quicker and easier to spot them is this one here, IBS V2. Now, once you've added that indicator to your chart, you can change the inside bar to whatever colour suits your charts. Now, the reason I'm looking at this one here is because we've had the buy before an impulsive sell, and this is the one here that has broken this low, and it's also broken this low. So let's mark out these zones. So we've broken this low here, we've also broken this one. We don't need to mark that one as well, but we know that we've broken this low. So let's then mark out our order block. So we're going to mark it out very similar to a standard generic order block in the first order block lesson that we've covered. Okay, except this one we're a little bit more focused on the fact that it's an inside bar, because this has given us a better probability that price is going to come back, mitigate this before pushing away. As we can see, this is what's happened here. Now, we're not going to look at every single inside bar. There's a few things that we need to look at in order to have a favourable order block. Okay, so this one here, as we know, it's had an impulsive move and it's also broken structure. We've left a little bit of imbalance in here as well, so this has given us a reason for price to come back up, tap into this order block and continue in its movement. So this one here, not too interested in this area, even though we did get some kind of mitigation there, but it's not very impulsive compared to this example. Now, what I do like the look of is this inside bar. All right, now this one, we've got the last buy candle, but then we've got the sell candle, and the sell candle is actually the inside bar. So the reason I would still look at this is we're still looking at the last buy candle, but then we can refine the order block to this candle. So we've got a little bit more of a precise area to look at. So typically we would usually look at the previous candle, but we then can refine it to this one, and we can just make it a smaller window to look at and a little bit more accurate. So if we zoom out, we should get a mitigation into this point, because we've broken structure, we've broken this low here, we've got some impulsive movement, and we've also got imbalance, which is causing price to come back up to this area. So let's paint the picture. Break a structure. I class that more as minor structure, but it's still breaking a low. Got imbalance there, so let's look right, see what happens. Here we go, we get a mitigation, okay, and then we get a second tap into this area. So to cover this again, we've got an impulsive movement, we've refined to a more precise area, which is actually the last sell candle before the impulsive movement, rather than the last buy candle. We've broken structure, we've got imbalance, and it's given us a reason for price to come back up to this area. So here's another order block I want to show you, and this is the range. So first off, we've got this zone here. Price is just ranged in this little section here. So let's just highlight this area. Now we're going to be looking at the last sell candle before the buy. So we've had this impulsive push, okay, so we're looking at this candle just here. So let's highlight this one. Alright, so these order blocks, the range order blocks, I mark up in blue. Right, so with ranges, we've got liquidity sat at the top and the bottom of the range. And these areas need to be swiped. So this impulsive move has swept liquidity to the top. Okay, we've then pushed up, come back down, and yet we still haven't mitigated this order block. So what's happening is traders are being induced into the market. So from here, everyone's thinking, right, we've had this big push up here, we're going to go long. And some traders may have got in around here potentially and continued long, and either their stop losses or trailing stops would have been taken out on the way back down. However, let's just zoom out a little bit. As you can see, if we push this order block over, we can see that this point did get mitigated. Now, as we are expecting liquidity underneath to be swept, we're now going to be looking, after this mitigation, we're going to be looking for shorts. So as you can see, we've had this price stagnating around here. We've also got some equal lows as well, so we'll mark this up as liquidity. So this has given us a reason for price to be pushing back to the downside. So we've got these equal lows. You can even mark out liquidity around these points as well, but we're not going to clutter the charts too much. But after we've had this mitigation, we've had a push into here, price has pulled away. Now if you look here, a little bit closer in, we've got the last buy candle before the impulsive sell. So we've got a couple of areas here. No, okay, right, so we'll go with the purple candle. Alright, I thought this one was a doji, but it's not. So we've now got this area where price has pushed into. So we have this supply zone here. Now what's happened is this has generated quite a lot of liquidity to fuel the price, to fuel the movement to the downside. So you could have taken a trade off in here. Now once this has been mitigated, we've got this impulsive movement, which has broken this bit of structure, it's broken this bit of structure, and then it's tapped into this order block to be mitigated. So this would have been a very good place to be looking for sells, because we're now looking at a confirmation that price is wanting to push further down.